Welcome to an overview of Denmark's implementation of e-invoicing and digital VAT reporting, highlighting compliance with EU standards and future developments. In this video, we will cover the phased implementation of e-invoicing, post-audit models, scope and applicability, technical standards, VAT reporting, penalties, future EU alignment, and compliance recommendations. Let's begin with the historical background of e-invoicing in Denmark, the current B2G requirements, and the legal framework and phased deadlines for B2B e-invoicing. Denmark has mandated public sector e-invoicing since 2005, making it a pioneer in electronic invoicing adoption. The current focus is on expanding mandatory e-invoicing from B2G to B2B transactions to increase efficiency. Denmark's Bookkeeping Act of 2022 establishes the legal foundation for mandatory B2B e-invoicing. Implementation starts with large and medium companies on January 1, 2024, and smaller entities in 2026, aiming for full electronic B2B invoicing by 2027 to 2030 to meet EU standards. We now turn to Denmark's post-audit approach, covering differences from real-time reporting and key digital record-keeping requirements for audit readiness. Denmark currently uses a post-audit model, meaning invoice data is not transmitted to tax authorities in real time, contrasting with real-time reporting systems in other countries. Companies in Denmark must be able to produce a standard audit file for tax or SAFT upon request. The SAFT contains comprehensive accounting data and is not continuously uploaded. Next, we discuss which businesses and organizations are covered by Denmark's e-invoicing mandate and its applicability to different transaction types. The mandate applies to almost all Danish businesses and organizations engaged in commercial activities, regardless of size, including foreign businesses with Danish VAT registrations. Starting 2026, foreign taxable persons with Danish VAT over DKK 300,000 must follow digital bookkeeping and e-invoicing rules. Business-to-government transactions are fully included in the electronic mandate. For business-to-consumer transactions, electronic invoicing is only required if the customer consents. Let's review the mandated e-invoice formats and standards in Denmark, along with restrictions on invoice formats and digital signatures. Denmark requires Oyable, a national format based on UBL 2.0 and DPEPFOLVIS 3.0, an international XML standard. Oyable version 3.0 will be mandatory from November 2025 onward. PDF and paper invoices are not accepted as they hinder automatic processing. Digital signatures are not required for e-invoices. Now, let's look at Denmark's VAT reporting process and data handling, focusing on the absence of pre-filled VAT returns. Denmark does not provide pre-filled VAT returns because authorities have not yet collected all invoice data continuously. Taxpayers must manually prepare and file their VAT returns. We will now cover the penalties and enforcement actions for non-compliance with Denmark's e-invoicing and bookkeeping requirements. Businesses face substantial fines for violating bookkeeping and e-invoicing requirements. The Bookkeeping Act allows fines up to DKK 1.5 million for serious or repeated violations. Other consequences include qualified auditors' reports, regulatory orders to comply, and even exclusion from government public tenders for non-compliant entities. Looking ahead, Denmark is preparing for future changes aligned with anticipated EU-wide reforms and a possible central invoice exchange platform. The EU is planning VAT reforms to modernize VAT handling with digital solutions. Denmark may see a central public data platform for e-documents and, in the future, real-time VAT reporting and pre-filled returns. Let's examine the mandatory e-invoice data requirements and key compliance recommendations for businesses operating in Denmark. E-invoices must include seller and buyer information, a unique invoice number and date, line item descriptions, tax details, payment due dates, and any applicable exemptions or reverse charge notations. Businesses must meet e-invoicing deadlines, use accounting systems compatible with Oyable and DPEPFOLVIS 3.0, be able to generate SAFT files on demand, and ensure foreign VAT-registered businesses know their compliance obligations. Denmark's e-invoicing and digital VAT reporting framework demonstrates a structured approach to compliance. Understanding implementation phases, standards, and future EU alignment is essential for businesses aiming to remain compliant and competitive.